Okay. Only for these debit notes, the interest will not be applicable for the intermittent period, whereas in all the other cases, the interest will be applicable. So that is the reason why this 12 subsection 6 and 13 subsection 6 requires a specific attention. And further, as we all know, in 16, the amendments were made in 2019 to state that to, in fact, remove debit notes being attached to invoices. Invoices and related debit notes were cut out for the specific reason, because the debit note can come in the next financial year also. But if 16.4 is going to restrict invoices and related debit notes, ITC may become a impossibility. To avoid that only, there the debit notes were delinked from the invoices. Take for instance the example that we are discussing about. January 2022, the original invoice. January 2023, the debit note. Had we continued with the older provision of not having, having a link between the debit note and the invoice, then what would have happened? January 2023 debit note would have become ineligible to be taken as ITC, because the original invoice pertains to the earlier financial year. Though the debit note does not pertain to the earlier financial year, but it is considered to be pertaining to this current financial year, the allowance of ITC has been given by way of amending this 16.4. So the delinking happened for debit notes, is a connectivity that we need to establish with 12 subsection 6. And second, the time of supply for a debit note is not existent apart from the scenario where it is covered under 12 subsection 6. So in all the other cases, debit notes do not have a specific time of supply. In all the other cases, time of supply is only there for the invoices. This is the critical point or the moot point where in most of the cases, especially where 12% government supplies was collected and subsequently the court rules that it should be 18%. I think in Kolkata we had a scenario where the court had ruled that 18% should be paid along with interest. The reason being, this is something which I wanted to highlight when we go through 12.6 and 13.6. So now that concludes our discussion on 12 and 13. Let's get into 14. Now 14 is one-way arithmetical, but 14 comes with another challenge in terms of whether 14 has a relevance in certain scenarios. We will look at those. Customarily, I will introduce or take you through 14, and then maybe we can deliberate those points. Section 12 and 13 notwithstanding, Section 14 has the power to say whenever there is a change in the effective tax rate. So the scenario where we saw it very recently happened with respect to government supplies. So the 6 was made 4 and 4 was also made into made to continue at 18. What was that? Just to give you an preview of what happened from 1st January 2022 till that time, 6 entities, the central government, state government, union territory government, and then local authority, government entity. These were the 6 people or 6 entities who were entitled for a certain reduced tax, reduced GST charging in notification 11/2017. Now, from 1st January 2022, 2 of them were left out. That is, the government authority and government entity were denied this special treatment or special rate. Consequently, that made only any supplies that we are making to government, that is the local, state government, central government, union territory government, or local authority, were only getting that special rate of 12% or 5% in some of the cases. From 18th July 2022, the transactions were all coming under the category of 18%. This period, that is starting from 1st January 2022 till July 2022, were the most disputed point, I would say, at this point in time. And across India, in many places, I have seen notices being issued for either 12% to 18% and intermittent period invoices. How will they get affected? Now, the answer lies partially in Section 14. Section 14, I call it as the majority rule. because it was similar provision was available in the earlier point of taxation rules as well in service tax. So as per that, there are three events that are supposed to happen for a service. One, when it is okay, when it comes to in case of goods or services, is the common way in which it has been given. But in case of goods or services, we can deduce those three scenarios and see out of these three where the majority falls, whether it is after the change or before the change, and accordingly, the majority will provide. For example, out of the three, two scenarios falls prior to the change, then the old rate will be applicable. Is the way that we deduce. So, what are those three scenarios with respect to the goods or service? Is the date of invoice, the date of payment, and in case of services, the date of completion or the date of rendering of service. So these are the three dates that we need to take into contention and see out of these three, how much has happened earlier or how much has or what all has happened after. So taking this scenario of works contract, which is rendered to government, the work is completed or the part of that work is completed before 1st of January 2022. But the invoice per se is being raised after 1st January 2022. The payment obviously will be received after 1st January 2022. So straight away, the two dates, that is the majority of the three, happens after the change in rate. Now that is where department is harping and stating that we are liable to pay GST at the new rates, that is 18%, not at 12%. Had the invoice been raised before 1st January 2022, then it would mean to the extent of the services covered under that invoice, the service is already rendered. So it is completed and the invoice is raised before 1st January 2022, but the payment alone is received subsequently. Then we can always say that the old rate, that is the 12% rate, was applicable. Now this is the moot point in section 14. So wherein the purpose of section 14 is to prescribe how to determine the, or in what way we can determine what is the effective rate applicable for a transaction when the transaction happens in a period where there is a change in the rate of tax. And there again, the date of payment, they have kept a control or a check over it by stating that it is not the date on which it is getting recorded, it is fine. But if you record in your books of accounts after 4 working days, then the date on which it is credited to the bank account, that will be taken into consideration, because conveniently we may record the payment at a later date is something, the reason why this has been also prescribed as a proviso into section 14. Now these, on a cursory level, we'll be able to understand that, okay, section 14 has got an impact. It just conveys as to what is the specific rate to be adopted for a transaction. So where section 14 does not have its full impact, or where I felt that section 14 is failing, is a scenario where section 31 subsection 5 comes into the picture. The other day also we had a discussion on 31 subsection 5 with respect to continuous supply of service, where the invoices are raised as per the three terms which are mentioned, whether the payment date is agreed or whether it is with respect to a particular date which is agreed on the contract or on or before receipt of payment. When we are going by 31 subsection 5 and raising the invoices, will 14 have an impact on these invoices as to when it should have been raised? Or when I am not following 31(5), will I still be able to use section 14? For instance, I'm supposed to raise an invoice on 31st of December 2021. I do not raise it. Will it be deemed that that is the day on which my invoice should have been raised? So we will go by that date and give the old rate benefit to the taxpayer under section 14. Can it happen? Remains a question mark with respect to 31(5) transactions. That is the ones where there is a continuous supply of service will I be able to really use section 13 and 14 to my benefit is a question that still we are trying to figure out with the department. I think, yeah, that is pretty much about it from my side for section 13, 12, 13 and 14 with respect to time of supply. I'm sure there will be questions, and there are certain questions I also have, which I want to put forth in the forum for discussion. Yes.
Shankar sir, practically DGG has taken up the M-books from executive engineers, get the date of the signature and allege that that is the time of supply, irrelevant of section 12, 13 and 14.
Yes, that is what I have also gone through. And DGGI, I mean, in case of DGGI, as well as the inspection from the state, they are relying on the M-book. The date of entry in the M-book, how does it become my time of supply is a question. Will they be going by, I mean, going the assumption that that is the date on which it is completed? If they say that, to that extent of invoicing only it is completed. For instance, in a contract of, let's say 100%, I've completed 70%. And that is entered in the M-book to the extent of 70%. I'm raising an invoice, but the invoice is raised post that date on which it is entered in the M-book. Now, I know that department is giving me a benefit by deeming that it is as per the M-book, so we will charge you 12%. If they say that, that is fine. But they say that it is entered in the M-book before, that is when the rate was 12%. But since you raised the invoice later, now we are going to go by the 18%. Because the invoice was raised later. Is it the same that also happened in your case, Unni, where they assumed that it is 12% or they assume that it is 18?
Mine was not for 12 and 18. Mine was for pre-GST and GST.
Okay.
So the entire turnover that is supposed to be under VAT as per the SSC, a department wants to charge 18 and 12.
Now, similar scenario, you place it under GST. Will they say that since the M-book entry has come in December 2021, it will be 12% only? In my case, they are saying the M-book is December 21, but you raised invoice in January, it will be 18.
See, practically, from what I'm seeing, there is no concept of invoice with these government contractors. There is an M-book, there is a date of payment. That's it. Correct. Most of the final documentation, they just sign off on the pro forma or whatever payment voucher that the government departments prepare. The tax invoice is not preparing. These most of the contractors I'm seeing are following a receipt basis of accounting. There is no concept of tax invoice preparation at all. And that is why we are also getting cases where there is a mismatch between GSTR 7 and the 3Bs.
Ideally, in those cases, you should not be getting, because when they do receipt-based accounting, they will get away from the
these guys, what they do is they take out the payment vouchers and get them discounted from certain banks. So, and at that time, they discharge in 3B. And only when the bank bill discounting is subsequently closed off by the PWD or the CPWD, at that stage only they release it in the GSTR 7. So we have definite time of supply issues, no, not time of supply, reconciliation issues. But at the same time, DGJ is taking a different position that you should have raised an invoice, and that is the point in time in which time of supply triggers.
Exactly. And in some of the cases, just to go back to 2017, the pre-GST cases where the invoices were raised and reported in VAT. Yet those M-books were updated post 1st July 2017. Department is deeming that it is pertaining to GST period, wherein when the payment vouchers are given by the respective government departments, the works contract TDS has also been done by the government department.
Exactly same case I am handling now.
And they are saying we are going by time of supply and when it is entered in the M-book. Now, what is the sanctity of M-book from my point of view of the time of supply is something which is an open question which is not getting answered.
I think only after the e-invoicing has come, this issue of 7 and 3B reconciliation that has gone down.
Because now yes, to a large extent, yes.
Yes, now they are filing all the 3Bs on time. So if you have any other questions on time of supply, I think this is the optimum time to discuss that. So we'd request anybody to share their views or the questions on time of supply. Or if any interesting litigation also you have faced, which you are fighting, that also can be discussed.
You rightly pointed out that most of the state authorities are not focusing on establishing time of supply in the notices. So you have said that in one case, the difference in stock, they are adding GP and there is no time of supply. You said we will protect interest and say we'll go to 13.5 or 12.5. But I mean, should we admit to 12.5 or 13.5? Can you simply not say that there is a arbitrary identification of time of supply or no identification of time of supply and the SCN itself is not valid?
Yes, I'm even questioning the levy from that perspective. So that is why we are not even getting into time of supply. But what I was concerned was, had they, or if they are able to successfully defend the levy point, will I still be able to question time of supply? So that we keep it as a secondary defense.
No, so you are saying that let us assume that where there is a deemed supply other than Schedule 1. So let us take a case of Section 35(6) read with Rule 58, where if there is a excess stock that is found as part of an inspection at a place other than that which is registered. So the excess stock, even though technically it is still available, is deemed to be supplied.
Yes.
So what is the time of supply for such deemed supply when there is an actual stock present there at the unregistered premises? Is it the date of discovery of the stock or that tax period in which the SCN comes? When is it actually deemed to be supplied?
Oh, that is where I feel 12.5 will come into picture when they assess and they make me pay. That will become the time of supply.
No, the problem is if I say it is pay, if I don't pay, then time of supply doesn't trigger. So to make me pay, there has to be time of supply, right? You cannot build upon
I've
the.
recently handled an issue on this in a construction company. So what they have done typically is they have considered the purchase date as the time of supply for this excess stock. They are saying on that date you got it and you sold it after that, and because the stock is there. I mean, say short stock, so don't say short stock. So again, I think there what Shankar sir is saying that would be a good logic to say that we'll go by 12.5, even if you have to go, even if you have to pay, it cannot be the original date of purchase because that's what they're considering. That was the
Even
date.
I feel the same, sir. 12.5 will prevail
Yeah.
because the date of payment of tax, the residual rule will come into picture.
And only in your case, 35(6) they will deem. Moment they take it under 35(6), I will say that yeah, there is extra stock. I will pay tax because they are assessing the tax. I will tell them that you cannot charge me interest because of 12.5.
And also, I have one query here. See, in case of with respect to, we know that only for specifically for motor vehicles, we have to pay GST only on the profit. That is value over the book value. Okay, in such a scenario, you cannot arrive at the profit at the time of sale. That is when the invoice is being raised. We will be able to know only at the end of the year. Can we take the time of supply to be 31st March of that year end, or should it be only the invoice date? Or can we argue that way? That since the tax is payable on profit, GST is liability to pay GST is only on the profit, and the profit can be identified only at the end of the financial year. Normally it is 31st March. Can we say that it is only 31st March is the time of supply for this particular transaction, specific transaction? Can an argument be done that way?
You are talking about 8/2018, ma'am?
Yes.
Okay, 8/2018.
Don't you think there is an avenue to make an argument like this? That's my question.
Okay, in my view, is 8/2018 talks about the income tax WDV, that is to be calculated as per Section 32 of income tax. So if I do that in the year of sale, I don't get to charge depreciation. So it is only up to the start of that financial year, which means that it is helpful for me also in a way because my opening balance will be more. If I depreciate it, my carry down value will come down, profit will increase to that extent. So since the last year's closing is only going to be taken, I don't think this will be defendable.
Okay. Got it. Thank you.
Guruji sir, you want to add, or Arpit ji, you want to add? Anybody?
Yeah, regarding the Onni sir's query about 35.6, though it is not related to time of supply. For excess stock, my view is 35.6 is not for excess stocks. Like Arup sir, you said that 35.6 for short of stocks. Yes, that can be applied. So 35.6 cannot be for excess stocks. That could be either 64 or section 130 that may be used by the department. They are using this, but in my view, that is not a time of supply.
Gurjit sir, let me just take up the relevant rule and have a discussion on this, because this is being done at large wherever there is an inspection. So let us go to Rule 56. Okay, and Rule 56.6 says, if any taxable goods are found to be stored at any place other than those declared under Sub-Rule 5 without the cover of valid documents, the proper officer shall determine the tax payable on such goods as if such goods have been supplied by the registered person. So Rule 56.6 seems to say that it is actually applicable for excess stock and not stock shortages alone.
Yeah, rule is fine, but how do we relate it to section 35.6? That is,
Because 35.6 is the only parent from which 56.6 can borrow its powers from.
no. The powers would be under, that is what I'm saying. It will be under section 130 that those are goods liable for confiscation, or maybe for summary assessment, section 64 will have to be used. It will not be there. So if you're saying that they were found at an unregistered premises, so that unregistered premises, from the registered premises to the unregistered premises, they have been supplied. That could be the scenario. Maybe the person is the same or not. But it is 35.6 because it also refers to subject to section 17, subsection 5. And section 17.5 is about goods lost, stolen, or destroyed.
That
So
is
if there is any shortage of stock, which is not lost, stolen, or destroyed, that's shortage of stock. In those cases, 17.5, we just reverse the ITC. But besides these 17.5, any shortage of stock, it will be at the its output value would be at the supplies value. So that will be value added, GST on value added. And regarding time of supply, for the deemed supplies, in the starting, I'm sorry, I missed something which was left over from the earlier previous discussion, and it was taken up today morning regarding the failure of the time of supply in cases of Schedule 1, etc. So, Shankar Narayan sir, can you, what is your final view on that? I just joined in and that was, you were mentioning about that.
I'll quickly paraphrase. It is with respect to corporate guarantee, where Schedule 1 is applicable. That is read with the current amendment to the Rule 28. So where we don't make any entry in the books of accounts, but a guarantee is being given by a, let's say, a related person to the other related person. Now, in those cases, what is the time of supply?
So, sir, here, say, section 35, as per section 35, every registered person has to account for all receipt of goods or supplies. So would that include the deemed supplies also, the goods or services? So if that has to be recorded as per section 35, so that will be the date of recording in the books of the accounts. So by accounts, do we limit ourselves only to the financial transaction? When it says that all receipts have also to be recorded, so whether they are deemed supplies or supplies as well as receipts, inward and outward supplies have to be kept record of. I'm not much into accounting and audits, etc. But say there could be some scenarios where all these specifically corporate guarantees, they become part of the contingent liabilities. They are not part of my trading account and be a balance sheet, etc. But they are part of my records because I have to pay taxes on that. Even once it becomes a deemed supply, I have to keep it in my records somewhere. So whether it is my financial value will also be as per the deemed supply, there has been a rule for value given. So I just wanted to put that for consideration also. So is it only about the financial transactions which I am recording, or it is also for the recording of all inward and outward supplies? What is meant by in 13.2, if we consider it is specifically written when the person records the receipt of goods or services in the recipient. But in the later section, it is just mentioning that recorded in the books of account of the recipient. So if we take the idea from section 13.2, I'm just putting it forward for consideration. That is more expressive, the language in that subsection.
We arrived at that solution by way of coming from the other direction, wherein it will be subsequently disclosed if the related party transactions are in the contingent liability. So we need to take it according that as the basis for payment of liability as well. And that is where I also felt that even if there is no time of supply that is mentioned, it does not mean that levy will fail.
Yes, sir. Let's consider inter-branch transfer of stocks also. So there may not be any amount payable. It is just a deemed between two distinct persons. The supplies, it is deemed to be a supply between two distinct persons. So that has to be recorded somewhere. So will
But
that
if it is
record of the
inter-branch transfer,
outward
there
or
is invoice,
inward
sir.
supplies, that will mean that will be the accounts, or it is only the financial transaction? Are we limiting our thoughts only to that? Or is the legislator limiting only to that? Not only the services like the corporate guarantees or other, say, from outside India to the companies which are in India, all that cross-charge talk, which is becoming a very huge issue. But we can say a simple example of transfer of goods between two distinct persons. So that is also no payment is to be made. It is not to be recorded, but the inward and outward it has to be recorded somewhere.
But in case of inter-branch stock transfer, there is an invoice. So we can take the invoice date. So there is a time of supply.
No, invoice is there because it is deemed to be a supply. So wherever a supply is deemed to be, whether it is a services, so once that receipt is recorded or a outward supply is recorded, there has to be an invoice also. That
When
has
there
to
is
be
a
raised.
automatically time of supply goes to the date of invoice.
Even for corporate guarantees, that invoice would have to be raised. Invoice follows because it is a supply. Otherwise, the inter-branch transfer of goods can be on the deemed challan also. It can be, challan would be sufficient, but for GST purposes, we'll have to raise an invoice. Normal accounting, we won't raise the invoice for that.
So automatically the date of invoice becomes the time of supply.
Yeah, if we follow that invoice has to be raised, then that becomes an invoice date would be as per the time of supply, whatever is there. So when we record that receipt, then the invoice has to be raised accordingly, whatever the invoice provisions are, then whatever is the time
Not
of supply.
recording, sir. It is like a removal. Goods has to be moved. So when there is a stock transfer, so section
When it is if we are talking about stock transfer, yes, then it will be at the time of removal or before or at the time of removal.
Correct.
So it has to be read. I'm talking about services. So say if it is those services are recorded as inward receipt or outward receipt. So as per that, then the invoice will have to follow. That is one view. Because the failing of a levy is a very drastic this thing. We should not go ahead with failing of levy. It seems very easy to say that levy is failing because there is no time of supply. Once there is a supply, then the records have to be maintained and whatever follows has to be done. So we should consider all this before terming it as a failure of levy. I'm sorry, I've taken a very longish description here.
No, it's perfectly all right, sir. I think Praveenji, you wanted to share something? Okay. So any other views or inputs that you want to give? Yes, Ji, since you are here.
Am I audible, sir?
Yeah, Praveen, you are audible now. Yeah.
Yes, sir. So regarding this surplus stock which is found during inspection, if it has to be confiscated under section 130, without, in my understanding, without satisfying 35(6), section 130 may not be possible, sir. For the reason that if we come to section 130 where confiscation, the reasons which are specified therein, those out of 5, 4 reasons require an intent to evade taxes. Whereas the second reason, which is that it has not got no connectivity with an intent to evade taxes. So if there is any surplus stock where intent to evade is not established, and if it still can be confiscated under 130 subsection 1 clause 2. And to fit into 130 subsection 1 clause 2, one has to satisfy 35 subsection 6.
Okay. Because you are saying that he is not accounting.
I think one point needs to be considered here
Yeah.
with respect to section 35(6), because section 35(6) is basically where the registered person fails to account for the goods. So it applies only for the registered person. What about the unregistered person in that scenario?
The taxable person who is not
Unregistered
registered.
person will get under clause 3, sir.
Clause 3 of 130.
131 clause 3.
Surplus. Yeah. Yeah, that is the
So in order to come under 130 subsection 1 clause 2, where intent is not established, without having 35 subsection 6, those goods may not be possible to be confiscated.
No, sir. Okay, that is where the difference in views comes. So my view is that 35(6) restricts only to the shortage of stocks, and for excess stocks, it is 130 subsection 1 clause 2. Does not account for any goods on which he is liable to pay tax.
Yeah, but how do we freeze on which he is liable to pay tax, sir?
does not account
Yeah,
for any.
one way of interpreting, of course, is that liability to pay tax arises only if there is a supply. So excess stock, if there is no supply, that is what it is not liable to pay tax. So that is one way of saying that. That is one way of saying that if it is there, so whether there is no liability till it is lying there. So how to do that? And it also that is one way, but the other way, like I'm saying, that if it is there is a liability to pay stocks whenever that supply is happening. So that levy would be there under the confiscation would be under 130.
Gurjit sir, can you just align Rule 56(6) with this?
Yeah, and we have not been paying much attention to Section 64 also, because that is a very, even the department, Arup sir, this is one another area that I needed to consider for the group. The discussions which we had, there have been some views that these should be, the links may be shared with other people, etc. In this group, my submission is that we do freewheeling discussions, which for the, say, the officers or from the other side, it may not be very productive if they are part of these discussions.
Right.
So that may be, again, please consider this. That will be my submission, that will enable us to have freewheeling discussions. So Section 64 is not being used by the department also very frequently. They are not even much aware of it. Many of the officers with the interactions which I am having them. But if you read Section 64 and the concerned rule, it is specifically where the goods have been found at any place which are there, and they are about, it is a peculiar situation where the immediate tax liability determination will be detrimental to the interest of the revenue. Only in those exceptional circumstances it can be invoked. But if in a go down, if in an unregistered place, all those are there. And it also says if the person who is not identifiable, the in charge of that place would be the person made liable. So that is one. Another thing is that whenever goods are lying in excess, whether the department go for confiscation in inspection or search. So inspection or search also is to be distinguished there. But all these are for discussions only. All these are for discussions only. We can have different views. But 35(6) in my view is only for shortage of stocks, especially when it says that subject to Section 17(5). The language may seem similar between 130 and 35, but the reference is from the subject to 17(5) that the limitation of its meaning derived can be there. But again, interpretations are never final till they are decided. So
Yes.
I'll leave it there.
Thank you, Gurjit sir. So since we have ESG today, ESG, I think you are sharing some forum about this, barter transactions. So if you could throw some light on the barter transaction as to how time of supply plays a key role there, like
Okay.
this media and construction one.
So, yeah, thank you, Arupji. In respect of barter, again, so the problem which comes is, first of all, identifying the transaction, whether it is supply of goods or supply of service. And once you do that, then we see 12 and 13. Now, in terms of goods, it comparatively becomes easier because the timing for issuance of invoice is linked with removal of goods. So as in when the goods are actually being removed, if let's say one party in that barter is supplying goods, then it is very clear that the time of removal to raise the invoice and time of supply arises accordingly. In terms of services, really the challenge which comes is in terms of identifying when is actually the provision of service happening. And I'm sorry I've joined late, but I think that's where in this whole time of supply, at least from the supplier's perspective, when the tax has to be paid on the forward charge basis, that's really the question which comes, because the rule in terms of raising the invoice says the provision is technically that it does not define it, and that's where that concept of completion of service arises as to when the completion has happened. And then we go back to service tax and we look at that circular of, if I'm not wrong, 2011, to identify that what are those factors to identify what is completion. So I would say that there can be possibility in terms of barter to say that both the parties are raising the invoice at a different point of time, and time of supply is also rising at different points in that case. So just like that, the valuation is mutually exclusive in terms of barter, the time of supply is also mutually exclusive in that case. And then accordingly, the follow-up to that would be that ITC issues would come accordingly to identify when that person has actually received the goods and services. So that's one aspect to this. Second, I think that question, which in respect of corporate guarantee, which was being discussed, my view is little different in terms of that even if let's say the invoice is not issued, again this 13(1)(b), which says the date of provision of service, I think again that also plays an important role here, because if let's say once we decide that it is actually a supply which has happened in terms of giving guarantee by one person to another, then really I would not say that we would go to C, but the case would any which way get covered in B. Even if let's say the recipient is making entry, not making entry in the books of account, because C only comes in when it is not covered by A and B. And provision of service is clearly identified. That would either be when let's say that the loan has been given, or as in when that it is that tri-party agreement, or in terms of that undertaking is given by the guarantor to the bank. So either of the two cases, depending upon how one would look at it factually, I would say that actually the provision of service has happened on that date. So really on that perspective, the issue of time of supply would not come. That's second part to this. Probably on reverse charge, I would, I think in one of the earlier sessions also I was saying that at least in related party transaction and distinct person, there probably is a situation where comes that if recipient is not making an entry in the books of account, then there is a problem in identifying what time of supply is going to be. And there I slightly, I mean, I would have a different view from Gurjit ji was saying that because we have provisions contained in section 35, recipient has to make the entry. The way section is written, it says the date on which the recipient makes the entry in the books of account. So if recipient is making entry or not making entry would actually have a different bearing altogether. If let's say recipient says I'm not going to make entry in respect of deemed supplies, then in that case, supplier can't be forced to say that just because provisions are there contained in 35, which says that recipient has to account for, even if when he's not accounting for, the supplier has to still pay the tax. So that's my view on one of the issues of barter, which you said, and that discussion in respect of corporate guarantee, which we were doing.
Thank you, Yashi. Thank you so much. I think any other view? Ajay Shankar sir, you wanted to share something, I think, then the discussion. Yes.
There's one thing which is on the debit note attracting not just tax along with interest. That is another point which especially the price revision cases, people are not ready to accept. Wherein they say that where is the provision to say that I need to pay interest? I believe these were the only places, 12 subsection 6, 13 subsection 6 were the only places where we can deduce it from. And department is right in asking them to pay interest, but many cases it gets pushed back.
Right. Yeah, that is something we actually miss. So any other thing, I think Venuji also wants to share something about the builders not booking the land development rights. Yeah. So any other inputs? Nilesh, you want to share something?
Yeah, Arupji, I want to share on the interest part.
Yeah.
So, under the excise regime, when we are raising a supplementary, there is a judgment of SKF India Limited and SAIL, where the Supreme Court categorically held in case of a supplementary invoice, supplies on the date of manufacture. Taxable event is a manufacturing. So, manufacturing happening previously when the original invoice has been read. So, even the rate has been decided later on, you are liable to pay the interest. So, having said that, there is a slightly difference in GST regime and excise regime. In excise, there was no concept of time of supply. Per se, there was no categorically mentioned. Here, when we raise the first invoice, it says supply has been made deemed to be to that extent. So when I'm raising a separate debit note, can I say it is a separate supply or it is the original interest is as applicable?
Shankar sir, your views?
Sir, my view is the original invoice when it is raised, I think that is when the time of supply has begun. Similar to the excise, even excise, it was date and time of removal. I would say indirectly was the time of supply under the erstwhile excise provisions. So the same is slightly altered and placed in section 31. So I would say when we have raised an original invoice, the time of supply is completed. Any subsequent additions will only mean that the tax should have been paid on that day itself when the original invoice was raised. So that time of supply still holds good.
Okay. Avinamji, yeah, you can ask your question, please, Arvind. Yeah.
Thank you, sir. So I have one query where Mr. X is a newspaper company and Y is a radio service provider, means it's a radio agency where they have a barter transaction between each other, and X is providing some slot in a newspaper to give ads of radio agency, whereas radio agency is advertising the newspaper, and it is a barter transaction. So no one books that transaction in the books of accounts. Then in this case, the slot given, the time of supply of slot given in the newspaper agency, whereas what will be the time of supply for the radio service provider?
I think here what ESG said is that provision of service is very clear here, because the day I'm having the inscription, so that will be the day of provision of service for the newspaper, and for the radio, the slots when they were giving, I think that would be the provision of service. Yes, am I right?
Yes, sir. I supplement that, sir. Absolutely.
Thank you, sir. Thank you.
So I think Arpit ji, we are yet to hear Arpit ji. So Arpit ji, your final words, because we have about 4 minutes left. So you want to, yeah.
Hello,
add
Ruji.
something. Because vote of thanks will be given by our Venuji today. He's come after long.
So I was hearing the discussion on the time of supply, Shankarji, Unniji, and what Gurji has said. One thing I would like to discuss and put before the members who are present here, and something I also put before in previous sessions also, that section 50 vis-a-vis section 12, wherein section 50 proviso for calculation of interest say that wherein the supply has been made and has not been reflected in the return for the same month, in that case, the provision for payment of tax on cash component, payment of interest on cash component is not available. So supposedly, let's take an example that I receive an advance and I'm liable to pay interest on that advance. But I do not pay I'm liable to pay the tax on that advance, but I do not pay that tax on the relevant month. And subsequently, after 3 months, I raise the invoice when my supply is complete, and I reflect that invoice in the same month. So now in that case, interest would be applicable by virtue of that proviso or the main section in the month when the tax was required to be paid on the advance, or in the month wherein I reflected the invoice in the same month.
In my view, it is where the tax was required to be paid, sir. So because of advance.
Just the context that when proviso uses the word when the supply was made.
But in case of services, in case of advance, the time of supply is date of receipt of advance.
At what point we will think that the supply has been made? If we go through section 22, for the purpose of registration,
yes, sir.
At that point also the word has been left where the supply has been made. And when we issue the invoice, that at that part in section 31, it has also been said that when the supply has been made, the invoice has to be issued. So otherwise, whether we will treat, because there is an explanation in section.
Sir, I want to interrupt here. Even if there is no invoice for advance, we have to issue a receipt voucher. So that automatically is a document. Whenever there is an advance, we have to issue a receipt voucher. So that is a document. So we are liable to pay tax.
There is an explanation. There is an explanation. Yes, I am coming. That says for the purpose of this section, for the purpose of clause A and clause B, supply shall be deemed to have been made to the extent it is covered by the invoice, as the case may be, or the payment. But it is restricting itself only to the purpose of this section.
Yes.
See, proviso to section 50 is linking itself to where the supply has been made. It is not referring the explanation to section 12 or 13, which is there. It is only restricting itself for the purpose of the clause A or clause B.
Yeah, I'll take the revenue position and say, why do you feel the supply is not made? Supply can be anything made or agreed to be made of all forms. So even agreed to be made is a supply.
We have, if we go through the context wherein this similar words have been used in the entire statute, the context in which this supply has. See, there also section 7, it is made or agreed to be made. So in section 50 subsection 1, it is only saying where the supply has been made. It is not saying where the supply has been agreed to be made.
RPG, only one additional point from the revenue side, that the provisions of section 13 are actually linked to section 9. And if, let's say, we are not able to identify the time at which I have to pay the tax, again, in that case, those fundamental pillars of levy are not firm in that case. And that is why specifically they had to add that explanation to say that once any of these situations which are mentioned in A and B are done, then you have to treat that is the supply has been made, the supply which were referring in section 9. So when you say that it is only for the purposes of section 13, I am saying it is, yes, it is only for the purpose of section 13, because this 13 has to read with levy at 9. And hence that is why department will say that the in proviso what we have tax payable in respect of supplies made during a tax period. So how will you identify that supply has been made in which tax period? For that, you have to go to 13, and 13 is saying this point. Not in context of ITC or anything of that sort, but only for this particular purpose.
Any other views? See, this is one point which I have thrown open for the members to have, because in one of the cases, we have taken this stand and we are before the appellate authority. So, any views which are there from the other members also? Venugopal ji.
I think I will come here because the point that I had discussed in one of the meeting, earlier sessions only triggered this, wherein we were able to get the tax paid on advance as refund from the department by invoking 54.8. Wherein 54.8C, we were able to demonstrate that the money was received and tax was paid, but not as a supply. The original term was to do some works contract, but it eventually became that we could not do the works contract, impossibility. Hence, the money was refunded. So we sought a refund of the tax paid because there is no supply that has happened. We paid a tax on advance, but we told them that the original contract was not to do something, meaning it was not merely an assurance, it was to do a certain activity. Since it was not possible to do it anymore, we deemed that the supply has not happened and we got the refund also. Hence, I am of the view, though we pay tax on advance, it cannot be treated as a supply per se, unless and until the supply happens, which is the main essence of the transaction.
So when the supply has not materialized, in your case, you would have received issued a refund voucher, no, sir? Shankar, sir?
Correct. I raised a advance receipt voucher and paid the tax. And the refund voucher was raised and the tax was given back. Since I did not have enough money to offset against my further liabilities to adjust against that refund voucher, we applied for refund and we got the refund from the department.
Okay.
Shankarji, one thing I would like to add to what you have said, there was a circular in April 2020 when the COVID
yes, they had to issue that. They had to issue it.
Wherein they had said that if tax has been paid on advances, then refund has to be claimed. It cannot be adjusted against the supplies.
True.
So here one more interesting aspect comes. Sir, you were linking it with section 22 registration also, that it says on the registration only when the supply has been made. So continuing from what Mr. Shankaran sir has just said, that on advance tax has been paid. So if there is an unregistered person, how will he pay the tax unless that person gets registered? So that aspect also, that whether it is a supply, in this scenario, what sir is mentioning, the person was already registered. Let us say that there is a person who is unregistered and he receives an advance which is crossing that threshold limit, whatever is applicable. Now he has to pay tax as per the time of supply. It is not a supply, but as per time of supply, on advance tax has to be paid. As an unregistered person, he cannot pay the tax. He wishes to comply with the provisions. One aspect, if he registers only after making an invoice and pays the tax, was the liability there earlier? That means he would have got registered. He should have got registered earlier. So that, Arpitji, that is also one, since you were linking it with registration.
So that 12 subsection 5 will come into picture, sir. So where the person is unregistered, so automatically the date of payment of tax will become the time of supply.
Yes, that is what.
Arpit sir, again, another view of looking at it. 51 and its proviso needs to be read together. You cannot read 51 proviso on a standalone basis. 51 carves out the liability of interest irrespective of any linking to the supply. As long as there is a liability to pay tax, which has not been paid under the period prescribed, there is a liability to interest. Proviso only attracts as a measure to carve out a relief where there is 100% ITC involvement and it is reported in the same tax period. So 51 liability is already crystallized when you have not paid the tax at the time of supply for the advances. And it is not a case that is going to be saved by the proviso. So at that stage, the proviso cannot be read to override 51.
No. Uniji, we are not overriding 50 subsection 1. We are only seeking the benefit of proviso to section 50 subsection 1, saying that even though the tax has not been paid at the time of advance, but since the relevant invoice has been shown in the return for the month in which it was issued, so therefore we should be eligible for the benefit which has been given by the proviso.
So I think as with every SMS, Saturday morning session that we have a lot of food for thought. So I think this is also wonderful food for thought, because yeah, I think this absence of the word agreed to be made, rather supplies made. I think that needs to be thought upon, and maybe something, creative can be thought out of it, or, out of the way. So as we are on the time, so we would like to close within the time also. So if there are many members who have joined, like Padma ji, Ashwin ji, Annapurna ma'am, Virendra ji, yeah, Paul sir, so, and everybody else, Srinivasan sir. So I really like to thank everybody, and I would request Venu ji to offer a vote of thanks to Shankar Narayana sir. I don't know whether
Arup bhai, sorry, I will not be able to speak.
Okay, I understand. Yeah, that's why you're sending messages. Acha, theek hai. So, Arpit ji, you can do the honors.
Thank you, Arup ji. So, thank you, Shankar sir. And as said in my last session, because I was there and Unni ji had taken the vote of thanks, so I was destined to take this time. So, I would like to thank Shankar sir for taking this extended session of time of supply. Normally, we have a speaker who takes a session or a two. Like Yash also took 2 sessions, and time of supply has gone beyond the time and the discussion which we have. I remember that in the last session, there was a discussion being made for time of supply, wherein Unni ji had specifically said that we discussed time of supply, but we never discussed that place of supply is not being identified while passing the assessment order or the show cause notice. So this was the discussion which Unni ji had started in the last session. And believe me, I was attending a hearing wherein the officer had identified a demand of 2.5 crore rupees in IGST, but he had not specified that place of supply, and I made up it part of my submission. And the additional commissioner himself said that yes, this is a very big mistake which the SCN has committed, that they have identified liability in IGST, but they had not identified the place of supply. And it would be impossible for the department to identify place of supply, since now the adjudication proceedings are going on and the relevant time limit for issuance of SCN has already expired. So this is the level of discussion which we have. And even if the participants who are attending, like me, in time of supply, are able to get benefit out of the 1% thought which the speaker is putting in these discussions, it is beneficial for all of us. And thank you very much to Shankar sir for giving this enlightened presentation on the corporate guarantee and the time of supply and the various issues which he had raised over the past 3 to 4 sessions, and during which he was ill also in one of the sessions for which he could not take. Thank you very much, sir, on the behalf of entire GST faculty group, and we look forward for such enlightening discussions from the members and your participation in the coming sessions, because we have thought of covering all the 174 sections. So it's a long journey, and we look forward for the support of all the members who have been making this success, and all are giving their thoughts on the issues which are being raised. Thank you very much.
Thank you, Arpit. Thank you everyone for joining in and also sharing your views and interacting. And also thanks to everyone for constantly asking us the next SMS cover. That really encourages us also to follow up with the speaker and get the things done. Thank you very much, and have a wonderful weekend ahead.
Yeah, bye.
Thank you, Shankar Narayana sir.